the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements for today. Singapore shares rose to track a positive day in Asia, so the Straits Times Index was up 0.8% at 4,264 points at about 2:12 p.m. Singapore time, and that is with a value turnover of 1.09 billion Sing dollars seen in the broader market. Now let's take you through the numbers. The STI closed up 0.99% at 4,273 points. In terms of value turnover, we are looking at 1.87 billion Sing dollars. Gainers outnumbered losers 356 versus 223. Top advances for today we've got for you DBS, GMH USD and ST Engineering. And top decliners we have here ASUS, New Incorporation USD and Hong Kong Land USD. Now, in terms of counters to watch, we have ST Engineering because the group announced yesterday that it won new contracts valued at 4.7 billion Sing dollars in Q2 of this year. Now, elsewhere from talks that the European Union is edging towards a trade agreement with the US, to Nvidia supplier SK Hynix posting record quarterly profits today. We've got more international and corporate headlines in focus. And joining me on the line on a Thursday is David Chow, director at Azure Capital. David, how are you?
Hi, Indian. I'm doing fine. What about yourself?
Good. And let's try to get over the second half of the work week, shall we?
Let's do it.
Let's do it. And let's start by looking at global markets. Mood on the trading floor has been largely positive around the world after the US and Japan finally came to a consensus on the trade front. How did Asian markets fare today then? Because I understand topics in Japan rose to a record high today.
I think, with an agreement being worked out already, it should come across to most, I don't know, so much needed relief, or is it? I mean, if you look at the topics in there, it certainly looked like it didn't needed one. So, and if you look at the chart, the recent high, I think, was at the 2,800 level, and with all the going ons in the external environment, I think the lowest this index went to was like only 2008, which is about like 1% lower from the high. So the index seemed to take a life of its own, without needing any consensus agreement being in place. So I think I'm assuming that the majority market participants were quite confident that Japan will reach a deal with the US ahead of the August 1st deadline. I mean, of course, not every market participants will be confident. As Japan's economy remains significantly export centric, with very heavy reliance on high beta cyclical sectors like autos, machinery, semiconductors, etc. And with that being said, this makes it quite vulnerable to shift in global demand. With the broader geopolitical de-risking trends happening. So with tariffs on the horizon and de-escalation expected to be uneven and prolonged, I think a likely slowdown in global capex, if it were to happen, will weigh heavily on corporate earnings, leading to potential earnings downgrades. But, kudos to Japan for navigating out of this. So with this, it's hard not to see the overall Asian markets continue to rally. And if you exclude Japan for obvious reasons, the MSCI Asia ex Japan, I think, is another 1.6% today, making a new high yet again.
Okay, and David, there is now talk that the EU is edging towards an agreement with the US. So reports say Brussels could get something similar to Japan, with tariffs cut to 15% from the previously threatened 30%. And the Financial Times also said the two would waive tariffs on some products, including your aircraft, spirits, and medical devices. Now, on top of what's going on with the EU, there are murmurs that the US and South Korea, they're working on some agreements similar to what struck in Japan. So how far are investors keeping their hopes high that all of these will eventually be realized?
Amid the euphoria in the stock market, I think the threat of much higher tariffs still remains for several large economies, including the 30% on the EU, 35% on Canada, and 50% on Brazil. And we all know from experience that we might not know the outcome until hours before the deadline, so we could be in a tricky situation in the coming days. But for now, I think investors appear still cautiously optimistic about the potential of trade deals, between the U.S. and both the EU and South Korea, though their expectations are tempered by uncertainty and the complexity of negotiations. I think the prospect of a U.S.-EU trade deal with tariffs reduced to 15% from the threatened 30%, along with exemptions for aircraft, spirits, and medical devices, has really boosted market sentiment. And of course, this is again reflected in the European stock markets, with the Stoxx 600 rising after the announcement, driven by, I think, optimism in sectors like automakers. And for South Korea, I think reports of ongoing negotiation for a similar Japan-type style, I think, has largely contributed to the rise in the South Korea Kospi Index. So overall, while markets are pricing in a scenario where tariffs settle around 15%, a level considered manageable by many, I think some investors are still not fully counting on these deals until finalized, given the risk of Trump rejecting proposals or imposing higher tariffs on other nations such as China or Canada. And again, you may not see this cautious response in the stock market, but some volatility in the current U.S. bonds suggests investors are hedging their optimism with caution.
Okay. Now, if you could go back to the Singapore stock market today, David, how far did it track regional and global movements? Any surprises when it comes down to the biggest movers, and in particular the REITs, given the earnings season?
Yeah, I mean, to recap, last week I actually said, I reiterated my near-term target of 4,250 for the STI. And now it's at 4,260. So I guess it's my duty to update this level.
Okay.
I had another interview last Friday, and I actually gave an update of 4,008 for the STI. So at this level, STI will be trading at a forward PE of 15 times at the 4,800 level versus the current 13 times PE. And then for the REITs, I think we a couple reported yesterday, and I stand to be corrected. I think the four will be like Digicorp, Mapletree Logistics, OUE REIT, and Sabana. And I think for these four REITs, it's generally it's a mixed bag. With some of them like Digicorp, for example, meeting my numbers on the top line, but missing out on the net income. And for Mapletree, there was a miss on both revenue and net income. When I see the reporting calendar, I think the majority of REITs reporting will actually come in today and tomorrow, and for the whole of next week. So perhaps we can discuss the overall results in a couple of weeks' time. Okay.
Now, just a quick one on Mapletree Logistics Trust, since you mentioned it. If we look at the numbers, its distribution per unit for Q1 ended June fell 12.4% on the year to 1.812 Singapore cents. How far were the numbers in line with your expectations?
On the revenue front, I was actually expecting 180 million, so the actual revenue just fell a bit short of expectations. And I think what is also of a slight concern is the amount distributable to unit holders of 92 million. My forecast was actually at 95. So the Street, along with myself, were largely of the view that, your distribution per unit will probably be lower year on year due to the absence of divestment gains, which is one-off, but it's partially, I think, offset by positive rental reversion and still high portfolio occupancy. And on rental reversion specifically, I think we actually see a very strong 2.1% for overall portfolio growth, with occupancy remaining high at 95%.
Okay. And if you could zoom in on some of the companies to watch, we have ST Engineering, because shares climbed 7.7% earlier to hit a record high after the group announced yesterday that it won new contracts valued at 4.7 billion Sing dollars in Q2 of this year. Any thoughts on the positivity surrounding the counter?
I think with this quantum of new contracts being won, I think it's the strongest quarterly performance since second Q of the year 2023, and I think, of course, continue to sustain the strong momentum from first Q 25th. So I think year-to-date order, we are seeing about, I think Sing dollar about 9 billion, placing, the company on track to exceed, their full year, I think FY24 figure of about Sing dollar 12 billion, if I'm not mistaken. So for investors, revenue visibility is very important, and this record high order book actually provides very solid revenue visibility, accompanied by quality growth driven by structural tailwinds, which include your rising global defense spending and your resilient demand across its core segments. So if I look across at its various segments, commercial airspace continue to win to get an order win of about 1.5 billion, driven by MRO contracts with regional airlines, and global original equipment manufacturers, OEMs. And if I look at defense and public security, they also recorded a second Q order win of about 1.5 billion, driven by a good pipeline of your defense, cyber, digital transformation contracts, and that goes the same for your urban solutions and satcom also. Okay. And with the company due to report, I think next month on the 14th, we are expecting it to report a revenue of about 6 billion and a PATMI of 405 million.
Okay. Now, across the region, David, we want to look at the latest results from SK Hynix. It posted record quarterly profit today and flagged plans to lift spending this year on advanced chip making. So, if we look at the numbers, right, the company reported 9.2 trillion won or 8.5 billion Sing dollars operating profit for the April to June period, up 69% from a year ago. How would you read into the latest results, especially in contrast with the numbers at its competitor Samsung Electronics?
It's SK Hynix latest result basically reflects strong position in the AI-driven semicon market. Particularly in its high bandwidth memory chips, which are again crucial for AI applications. I think this recorded operating profit of 9.2 trillion, 69% increase year on year, really underscores robust demand for AI memory solutions, especially from key customers like Nvidia. And when I look at the decision to increase capex in for this year, focusing again on HBM production, this really signals a strong confidence in sustained AI demand and a strategic move to maintain its lead in this high margin segment. So with SK Hynix proactive supply agreements, we see it recording possibly another record earnings in the coming quarters. But in contrast, looking at Samsung Electronics, yes, again led in the AI memory space, as I mentioned before, particularly in HBM. So if I take you back all the way, I think to 4th Q, where the gap is quite significant in my opinion. For 4th Q, I think last year, I think Samsung recorded an estimated operating profit of about 6.5 trillion won, with its semicon division contributing just about 3 trillion won. This is significantly lower than SK Hynix, 8 trillion won for the same period. So this gap alone, highlights, SK Hynix higher profitability, again driven by its dominance in the high bandwidth market, so where it supplies nearly all shipments to Nvidia. So I don't see this advantage being eroded anytime soon, but we have to be mindful of challenges do loom for SK Hynix, including potential US tariff. So let's see how Korea and US will negotiate, and of course we will still see Samsung try to claw back their market share. So this will be interesting.
Okay. Finally, before we let you go, David, the European Central Bank, it is set to announce its latest rate decision. Officials are expected to hold rates amid tariff uncertainties and perhaps also a rebalancing of trade ties with China. How will the ECB move this time, in your opinion, and what does it mean for European equities?
I guess for us, we are the view that ECB will do nothing this round, with the deposit facility rate remaining at 2%, especially after I think we just got the news that EU countries have overwhelmingly approved some tariff targeting 93 billion worth for US goods, as they aim to pile pressure on Washington, to agree to lower the tariff from 30 to 50%. So this will be very tricky. I think if I'm the ECB central banker. Yeah. So with this being unresolved, I wouldn't be that gung-ho, to actually, do anything to the interest rate for now, even though, as far as I'm concerned, the Eurozone economy is still showing a relative resilience. And what does it mean for equities? If you look at the Euro Stoxx 600 is up 24% in US dollar terms. So whether the cuts are made or not at this moment is kind of inconsequential, as the market is taking currency policy rates in its stride. So at eventual cut by ECB, I would say could continue to support the European equities.
I see lots to watch indeed. Thanks so much for the insights today, David. That was David Chow, Director at Azure Capital. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.